Investors and traders, welcome to the channel. Market chart pattern. Today is 14th of April 2024. Hope everyone is having a great weekend. In this video, we are going to take a look at the gold market, the silver market. We will also take a look at some of the gold stocks such as GDX, NEM mining, Barrick Gold. Also we'll start by taking a look at the US dollar. As always, this video is for educational purposes only and it's not a financial advice. We are taking a look at the weekly chart of the dollar index. Dollar index is a basket of major currencies. Past week has been very strong for the US dollar. One of the things that we were watching when we did the video last weekend was this 104.50 level, because this was a 61.8% retracement, and we were looking at the possibility whether the US dollar will face weakness or strength. So it was really at a pivotal point. Once we begin to get above the 104.85 level, so that was this double top formation here, the strength really accelerated in the US dollar. So this blue pattern, which is the ABCD with a question mark, looks like this one is in play, and the next point of attention for the US dollar is most likely 107 level, so which will be a double top formation here, and above that there's a possibility the strength in the US dollar continues and it could complete this ABCD pattern formation around 108.70 level, roughly speaking. So dollar was very strong last week, especially going into last Friday. The strength in the US dollar came in. And now moving down to the daily chart here, what we are looking at is of course that ABCD pattern formation higher to challenge these highs around here, and it's a pretty strong move here. One of the things that I would like to point as a point of attention is because the geopolitical situation, especially the events that took place over the weekend. If you're not aware of those instances, there's a major escalation in the Middle East between the two countries. You can Google about that. So dollar has a safe haven status, and during such instances, normally the investors begin to pile into the US dollar, and certainly this is what we saw last week, especially starting from the Wednesday, and also because of some inflation related data that came out harder than expected. So a number of things went in favor of US dollar. So here, because of if it was the buying was because of expectation of some major escalation in geopolitical events, there is a possibility when the market opens tonight that we might not see as much strength in the US dollar. In fact, because the event is over, there's a possibility those who bought a lot of dollars might in fact come into the market and begin to sell some of the dollars. So we could perhaps anticipate, if there is just no early follow through, we could in fact see weakness come into the dollar because of all those people who were buying it around here, basically profiting and getting out of their dollars, maybe too much dollars that they bought. So that possibility remains there, because we have seen such a thing happen around here, although not because of the geopolitical events, but we have seen a really strong move in 13th of February 2024, and then we have this really small candle here, and then we saw an ABCD formation taking us down quite a lot of points lower in the dollar index. So just be mindful of that. Really watch the price action tonight and also early morning London hours as well, if you are able to get some early clues what the market is likely to do. So with the US dollar covered, because that has an impact on the gold market, let's actually begin to start by taking a look at the gold market here. As always, what we are discussing in these videos is for educational purposes only. It's not a financial advice. Here what we are looking at in the gold market, we saw a fantastic move higher in gold come in last week, where gold went as high as 24.49 in the COMEX gold. This is the COMEX gold chart, it's not the spot gold. Just be aware of that. And last Friday, we'll have a look on the daily charts as well. Towards the close, there was a fair amount of selling which came in, and perhaps you can say profit taking. So all those people who were buying, around had been buying for quite some time. Some of them perhaps decided to take profits or whatever, and we saw a fair amount of selling coming in the market. But from our perspective, we were watching for this 23.74-75 level as the 1.618 expansion, and on the longer term monthly chart we have higher targets as well. So the gold was really performing well, but because of this really long wick that we see on the weekly candle, we have seen such wicks, especially around here, kind of like here, but this one is a really big one, kind of comparable to here. Here was another one right here. So there's a possibility, if we don't see a follow through in the gold prices to the upside in the next day or so, that maybe we are actually looking at a pullback in the gold market, which has been in a fantastic run, especially towards the beginning of March of 2024. In a short amount of time, it has gone up quite a lot. So the last time we had a correction, we had it for about this much in terms of magnitude. So having the concept of market symmetry, where markets like to repeat again and again. If we just take that and project it from the recent top, we get a figure of about 2188. And if we just draw a retracement from the lows around here, 2nd of October 2023, and the top of, assuming that's the top or the highest point as of last week, we also get a 38.2% retracement around 2210. So we have a confluence of two things coming together in about $20-30 range, which is not a lot these days in gold, because gold tends to move quite a lot now. So there is a possibility, if there is a pullback, the pullback could in fact go as low as 38.2% retracement, and maybe possibly even a little bit lower, basically around to this point of 18th of March, when the gold market began to really break out and accelerate in a few weeks to the upside. So we just have to be mindful of that and carefully look at that. Now this is the daily chart of the COMEX gold. We had a number of these ABCD patterns here, but the price exceeded all of them, and this is why we also had the weekly targets as well, which were also met. And this is the price action on last Friday, and we can see at one point the gold was around 24.48, but it closed at 23.60. So it went down for about 90, roughly, about $100 roughly speaking. It closed lower from its highest point. So that's the biggest kind of candle. The only other candle I can see comparable to this is right here on the 4th of December 2023. So we have to be respectful of the price action, and if we have a candle like this, we need to pay attention to that and watch for the price action really carefully next week, whether there's going to be a follow through, or the market maybe it's possible it begins to retrace some of this, maybe $30-40, and then after that there's just no follow through, and we could see a further correction in this market. Longer term, here we go. This is the monthly chart. Here we go. Our price patterns that we are watching could in fact see this market go as high as $2,700. So that's a possibility, and what we are seeing now might be just a pullback in a bull market, and that's what we can think about at this stage. But the monthly charts do point to a possibility as high as about $2,700 per ounce, which is troy ounce, in the gold market. Okay, so with that, let's take a look at silver. So this is the daily chart of silver, and here you can see this candle last Friday is even more prominent. At one point it was roughly around $30 per ounce in the COMEX silver futures closed around 27.97, so it was down by about a couple of bucks roughly. That's fair amount of selling in this market which came in. The market has gone above our several ABCD targets, but something which is actually more visible on the weekly chart. So actually move to the weekly chart. Here we go. The markets actually challenged these highs coming in from the February of 2021, but it's not able to take those out. So here we have seen fair amount of selling coming. So again, watching for further price action on the weekly chart. If we just draw this larger ABCD, that could in fact see the price go. There we go. So yeah, this one I did not draw last week, but this ABCD points right to the point where the market reached as the highest point last Friday. So there we go. We have a completed ABCD, and then we on the left hand side, when we see we have a fair amount of structural resistance around here. So if there is no follow through, the chances are this market is actually also going to go into, like the gold market, at least a pullback, and this is the kind of pullback that we have seen. And here we go, and it can come down as low as 25.50, 25.60 actually. And if we just draw a retracement, yeah, that's roughly about, I would imagine, 50%. Yeah, about 50% of that move could be taken out. Then we have some structural support in between the 26.80 and 25.95 level. We'll have to wait and see, but looks like this is what the market is likely to do. Now let's take a look at some of the gold equities. So we'll start with GDX. This is the gold miners ETF, quite a widely followed ETF. And here again, what we see is just a run towards these highs, but the market is not able to take it out, which is also an indication that the surprising thing is that the miners, they have not been moving as much as the underlying gold market has been. So that's a really interesting observation, and I believe that's because the run in the gold is mainly because of central banks buying. That's when gold really begins to move, because there are really big buyers in the market which are just buying the commodity, and they have big budgets to do that. So this could be possibly one reason why the miners, which are actually responsible for mining the commodity, have not been participating in this bull run that we have seen in the gold market. And of course, if you look at that fairly negative candle coming in right from this double top formation, might even be a triple top formation here. So the gold miner did not look that great from a price action perspective. Let's take a look at Newmont mining. Here we go. Daily chart of Newmont mining, and this is what we were looking at when we did the analysis last Friday. And what we have seen is basically this market hit this 40.85 two times, and it's a double top around here. And what this level is, this was the 1.272 extension of this swing. So we were looking at ABCD, and in terms of retracement, I haven't drawn this, but eyeballing it, I think it is about 78.6% retracement as well. So sorry, yeah, it just went it did not close above that. So what we are looking at is, looks like Newmont mining might not be ready for its prime time to the upside, because we have had two times closes below the 78.6% retracement, and then of course it's been a bearish trend. If we were to draw a trend line like this, the price has attempted to go above that but not able to, so that remains in play. Then if we look at Barrick Gold, where are you? Here we go. Oh my goodness. And the gold miners, look at the price action in here. An attempt to move above 1850. This is what we had drawn last week as well, but not able to take it out. So in my opinion, looks like a double top formation, and if we begin to move below 1750, I think that would be a confirmation, because it'll be taking out this kind of a micro double bottom around here. So not very constructive kind of a price action. And if I were to just take this double top around here, this is a double bottom, and it's also the 78.6% retracement. So yeah, fair amount of resistance in this market, so that looks like the miners might not do as well. So better to be watching the actual commodity itself, and the chances are, in fact, it might in fact be going in a pullback of its own. So this is what we are watching in the gold markets and silver, and also some of the popular stock that we are taking a look at. One last stock that I'll take a look at is the hecla. Okay, it's a small miner, and yeah, there we go. Yeah, so yeah, it looks like a 1.272 is kind of capping it, and if the price goes below this micro double bottoms around 525, then that might just have been it, and then most likely it's just going to go back into its range and try to tackle these highs around here. This is the point where it broke out from, so I might just go and retest that. So thank you very much for watching the video. Good luck and good trading. And if you like the way we do the technical analysis using Fibonacci retracement and extensions, expansions, and pattern recognition, please do subscribe to the channel. If you like the video, do hit that like button. Thank you very much. Good luck and good trading.